equal. Third, Sun Limited is considering two financial plans, details of which are as under. Funds requirements are 100 lakhs. Financial plan 1, 100% equity. Financial plan 2, 25% equity, 75% debt. At this stage, Darshita, can you fast tell me which plan is more risky, plan 1 or plan 2?
Plan 2.
More risky?
Yes.
Less risky. Cost of debt is 12%, tax rate is 30%, equity shares of rupees 10 each issued at a premium of rupees 15. So equity shares are issued at rupees 25. Expected earnings before interest and taxes are 40 lakhs. You are required to compute EPS of each plan. So let me find out EPS of each plan. Plan 1, plan 2. What is EBIT? 40 lakhs. 40 lakhs. Here we are not finding out financial break-even point or indifference point. We are doing the traditional question. We are just finding out EPS under both the plans. Minus interest. Interest in plan 1 will be 0. In plan 2, how much you are borrowing? 75 lakhs. 75 lakhs into 12%. It is 9 lakhs. This will be earning before tax. This will remain 40 lakhs. This will be 30. Tax rate is 30%. So EAT will be 28 lakhs. That is 40 lakhs into 70%. 31 lakh into 70%. It is 21 lakh 70,000. Preference dividend is not there. Number of shares. You have borrowed 100 lakhs in plan 1 from equity. So 100 lakhs divided by 25 is 4 lakhs. Number of shares. In plan 2, you have issued equity of 25 lakhs. 25 lakh divided by 25 will be 1 lakh. What will be EPS? Will be 7. What will be EPS is 21.70. Which plan you should select? Plan 2. But don't give the answer. Why? Because they are not asking us. What they are just asking is EPS in each of the plan. Number 2. Financial break-even point of which plan will be finding it out for both the plans. So let us find out financial break-even point. Plan 1. What is formula for financial break-even point? It is interest plus preference dividend upon 1 minus T. Using the formula, plan 1 financial break-even point will be 0. Why? There is no debt. So interest is 0. There is no preference dividend. There is no there is tax rate, but it will not be. It will not matter. Plan 2 will be interest. There is no preference dividend, so only interest portion, 9 lakhs. This is answer number 2. Financial break-even point of plan 1 is 0. Financial break-even point of plan 2 is 9 lakhs rupees. Indifference point between plan 1 and plan 2. We will be finding out indifference point. What is indifference point? Your EPS is equal. How to find out EPS? EBIT minus interest into 1 minus t. There is no preference dividend, so in this formula I am not writing out. Divided by level of EBIT. Please concentrate. Now I need to find out EBIT. I cannot take this EBIT. This is not level of EBIT at which EPS is equal. I want level of EBIT at which EPS is equal. So I need to find out EBIT. So I'm taking EBIT as X minus 0 into 0.70 divided by N is 4 lakhs. X minus 9 lakhs into 0.70 upon, this is for plan 2, this is for plan 1, EPS, and EPS should be equal. This can be cancelled, this will be 4, this will be 0.7x, this will be 4 multiplied by 0.7x minus 6 lakh 30,000. I have multiplied 0.7 with this 2 and this 4 I have taken on right hand side. This will be 0.7x. This will be 2.8x minus 6 lakh 30,000 into 4. 25 lakh 20,000. This 25 lakh 20,000 will go over here. 2.8x minus 0.7. This will be 2.1x. So x will be is equal to 25 lakh 20,000 divided by 2.1, which is 12 lakhs. Which is also nothing but EBIT. But it is level of EBIT at which EPS is equal. Level of EBIT at which EPS is equal. So let me write down all the answers on number line of point number 2 and point number 3. Zero, infinite, EBIT. This is financial break-even point of plan 1 because it is 0. 9 lakh is financial break-even point of plan 2. This is rupees 9 lakh EBIT. What is financial indifference point between plan 1 and plan 2? Is 12 lakhs. Okay, be fast and Drashti. In this case, which plan you will select?
Plan 1.
You will select plan 1. Why?
Because it is less risky and it is on the right hand side.
It is on the left hand side and financial break-even point right hand side. Yes. Yes. Abhishek, which plan you will select over here?
Plan 1.
Why?
Because it is right hand side of plan 1.
All right.
Break-even point
Just
and
one question. Whether plan 2 will be having positive EPS or not?
yes, sir.
It will be having positive EPS. Why?
Because it is right hand side of break-even point of plan 2.
Exactly. So plan 2, even if positive EPS, plan 1 will be selected because it is one more risky. Good. Next is this. If you forecast that your EBIT will be this, Hitarth, which plan you will select?
Plan 2.
Why?
It is more risky. And
It
we
is
are
more
on
risky
right-hand-
and it is on right hand side of financial indifference point. And you can even prove, try to concentrate. In first question, actual EBIT was given. What was EBIT? 40 lakhs, which comes over here. And so if it comes over here, more risky plan should be selected. Which was more risky? Plan 2, because plan 2 is having debt. Plan 1 is not having debt, so it is more risky. And so which plan was selected, or which plan was having higher EPS is plan number 2. In this case, R will be greater than KD, so there is a favorable leverage, and so we'll be selecting risky. These are two topics: financial break-even point and financial indifference.